Today you're going to learn which real estate investing strategy is best for you, either that be single family real estate investing or multifamily real estate investing. We're going to take a look at the pros and the cons so we can best determine which real estate investing strategy is best for you based off of your financial situation, your goals, etc. Something else to consider is how fast you want to be financially free, because realistically, you can get financial free in about 2 to 3 years. Because in my situation, I was able to reach financial freedom in just 3 years. With that being said, go ahead and hit that like button for me, turn it blue if you're excited, and also while you're down there, click that subscribe button down below and click the bell icon to get notified when I upload a new video just like this one, helping you create a life you love with real estate. The first thing I want to talk about is the barrier to entry, and what that means is how much you're going to have to put down on a property. For a single family home, the barrier to entry can be as low as 0%. That's only if you're a veteran or if you're using the USDA loan. Now, if you're using an FHA loan, that's also if you're living in the property as a primary residence, can be as little as 3.5% to 5% down on the property. You can also use that FHA loan to purchase a 2 to 4 unit, because if you're living in the property, you can deem that as your primary residence and then rent out the other units. Now, with a property that you're gonna be using solely as an investment property, you're gonna be looking at about a 15 to 25% down payment. And I'm saying 15% because I personally know lenders that have allowed me to put 15% down on an investment property. The difference starts whenever you start getting to 5 units plus, and because whenever you get to 5 units or over, it's now considered a commercial loan and it's an investment loan. You're now having to put 20 to 25% down on the property. You might be thinking to yourself, well, that actually kind of sounds like a con. That doesn't sound like a good thing. But think about it this way: with a commercial loan on a multifamily unit property, a lot of times lenders will allow you to get an interest-only loan period for about 5 to 10 years. What this means is your payments to the bank, your mortgage is just interest only. So your payments to the bank are going to be a lot lower than they would if you were paying interest and principal. That means your cash flow is going to be a lot higher during those 5 to 10 years. Now, after those 5 to 10 years are over with, those interest-only payments, you can then refinance into another interest-only loan and do the whole process again. But you could also sell the property, because at this time, rents have probably raised, which increases the value of the property, and you can sell it and use 1031 exchange, defer capital gains, and just roll it into a bigger property. That leads me into the next difference of single family home and multifamily, and that is the value and appreciation. From 1 to 4 units, the value of the property is just based off of comps, and comps stands for comparables. So for example, if you have a single family home and that single family home is 1,500 square feet, 3 beds, 2 baths, 1 car garage, etc., the value of your property is going to be based off of the properties in your area that are also 3 beds, 2 baths, 1 car garage, 1,500 square feet, and also the year built. This is also going to be within the last 12 months of it being sold. The same thing applies to 2 to 4 units. The value of the property is based off of the comparables. Now, the difference starts whenever you get into 5 units plus, because now the formula that you're going to be using for the properties to get the value of it is going to be cap rate divided by NOI, and NOI stands for net operating income. To get your NOI, all you have to do is take in all the gross income that you're receiving from that property minus your expenses, but that doesn't include your loan or your financing. To get the cap rate, you can just easily ask your local real estate agent and they will help you out with this. With this type of real estate investing in multifamily, I'm talking about 5 units plus, you can see how easy it is to increase the value because it's in your control. All you have to do is raise the rents or raise the income or decrease the expenses, and that raises the value of the property. With single family homes, duplexes, triplexes, fourplexes, you're subject to the marketplace, and sometimes that's not a good idea. Next, let's get into the cash flow and the scalability of single family homes compared to multifamily. Whenever you compare the two side by side, single family homes will have a higher cash flow per door typically. What this means is if you have 10 single family homes, you have 10 doors. If you have 1 single family home, that means you have 10 doors. Now, if you have a multifamily unit that's 10 units, you have 10 doors. So typically, on average, if you have, let's just say 10 single family homes, you're gonna have a higher cash flow from those 10 single family homes compared to the 10 multifamily units that you have. Whenever I talk about it's a higher cash flow per door, so let's just say, for example, that you're getting $400 in cash flow on the single family homes, and then you have about $200 in cash flow on the multifamily units per door. But the overall cash flow, you might actually be higher on the multifamily unit deal than the 10 single family homes. And here's what I mean. If you have 10 single family homes, you have 10 roofs, 10 HVAC systems, 10 things of expenses. Now with a 10 unit multifamily deal, you have maybe 2 roofs, you have 2 HVAC systems, 2 boilers, etc. You get the idea. Your expenses are going to be a lot lower with multifamily units. Therefore, that's making your overall cash flow, your total cash flow, higher with multifamily units. Whenever it comes to scalability of single family homes and multifamily units, think about this for just a second. Which is easier? Either buying 200 single family homes or buying 200 multifamily units. The 200 multifamily units is going to be a lot easier, and here's why. With 200 single family homes, unless you're buying it in a portfolio loan, which for this example, we're not going to be doing, you're going to buy 200 single family homes one by one. So that's 200 properties to find, 200 loans, 200 inspections, 200 appraisals, etc. Now with a 200 unit multifamily deal, you could potentially be looking at finding one property, doing one appraisal, doing one inspection, etc. So in regards to scale, multifamily takes the cake every time, because if you think about it in the terms of adding value, all you have to do is raise the rents. And if the rents have to make sense, but if you raise the rents, then that's increasing the value of the property, scalability. And now think about how long it's going to take you to find those 200 single family homes compared to the 200 multifamily unit deal. In my opinion, there are 3 things that single family homes do take the cake over multifamily. Single family homes tend to have longer staying tenants, so your turnover rate is going to be a lot lower with single family homes compared to multifamily. Also, something else that the single family homes have over multifamily is that there's a lot more inventory with single family homes compared to multifamily. So that means that there is more houses on the market for you to find rather than multifamily. Another thing that single family homes have over multifamily is whenever you go to sell the property, you're going to have a larger pool of people to sell to, because you're dealing with the average home buyer, you're dealing with real estate investors, etc. You're dealing with everyone under the spectrum. And then with multifamily units, you're dealing with mostly real estate investors. So the pool of people to sell to is a lot lower with multifamily units. If you want to know how to find single family houses or multifamily properties, there's going to be a video popping up right here that shows you exactly how to do that, and it's going to be completely for free. So if you're interested, go check out that video. Until the next video, I'm out. See you.